to Tech Sales Thursdays. I'm your host, the only host for now, JP Albano. Um, the purpose of today's workshop is going to be, or the purpose really, it's the topic, right word here. The topic is going to talk about passive income. Uh, it's a common desire I run into a lot of sellers asking for it, looking for it. Aside from trying to escape high taxes, the second thing is looking for passive income, the elusive passive income. And I think by kind of defining what passive income is, we can kind of go into more, what it's about, how to get it, how I help sellers get it, and all those good things. So yeah, took a little notes here. You'll see me looking down. That's me doing that. Now, by the way, if you have any questions, I should be able to see that here. To date, no one has asked questions, which is kind of sad. It's like I'm talking to myself in a vacuum here. So you got questions, throw questions on here. I do have some questions from previous workshop that I got post workshop being live, and I'll cover that at the end of the discussion here, right? So with that, I guess we'll kind of paint the picture of what fundamentally is the problem that we have as a tech seller. Fundamentally, the problem we have is we still live in a time for money paradigm, time for money system where um, we exchange our time, right? Selling things, selling widgets, selling software, selling hardware, or all of the above. And in exchange for that, we get money for that, right? And sometimes the money can be really good. Sometimes the money isn't so good because you're not selling anything and you get no money, right? That's kind of the risk that we take. Um, but the fact still remains, right? Whether you sell a thing or not, like you're still doing effort to make that money. And so for a lot of sellers, they're like the ones that kind of get it. They realize, all right, well, it's a lot of work, it's a lot of time, energy, and effort to sell these things. Yeah, sure, I can make some really good money on the receiving end when I complete a transaction. But like now I've got this cash, what do I do with that, right? How can I make it so that I don't have to keep working to make this money? Well, it's a good question to kind of ask myself, right? Um, and I guess kind of painting the picture of the reality that we all know. We all know that we could potentially make great money. There is the problem of being highly taxed. Depending on where you are in your tax bracket, we've covered this topic in previous workshops. The graduated tax bracket system in the tax code, when you're earning between X and Y, you'll be taxed at this percent. When your income is between this number and this number, it's taxed at a higher rate, and it goes. Um, so then the more you make, of course, then the more the taxes there are. That just part kind of sucks, especially when you get a big check. At least in my experience, when I get a big check, call it north of 10 or 15 grand, that's when pretty much half of it went out the window. They withheld, the maximum portion of that until tax time. So it went on vacation. Um, it didn't write any pictures. It didn't write any letters. Didn't send any pictures. And then when it came back, it was actually skinnier because I lost money. No, I wasn't penalized on it, but like the money sitting in the IRS account isn't earning any interest on there, so it's not working for me. So that's kind of useless. And then, of course, your income is tied 100% to your ability to close deals and get business done. So if you want to stop working and you're not paying attention to the deals that you're working on, those deals ain't going to close themselves usually. The other problem we've got is burnout is real. Gartner's study said that 90% of tech sellers are feeling burned out. And that's not a sustainable way of living your life, right? The tolls that it takes on your family members, on your team, on yourself, the wear and tear. It's easy, it's manageable when you're younger, but as you get older, it really starts to hurt things. You don't recover as fast, and frankly, you just kind of realize what's more important, especially after you have a family, right? Your perspective kind of changes on those sort of things. So there's that. And of course, I mean, I don't know. I think I've talked to one guy where my question to him was like, "Do you want to keep selling for the rest of your life?" And I think he said yes. But everyone else I talked to is like, "No, I don't want to do that. I want to retire at some point." And I think the name of the game of retiring, right, when you're 65 with a pension and Social Security, like that's for a different generation. And I think we need to start thinking about what retirement looks like for the modern age, right? Like where you can be a solopreneur, you can have a side hustle, have a business. What life looks like post sales, I think is a very, very, very possible reality that we should all start thinking about. And the purpose of what I try to do and how I try to help sellers is help them maximize the money that they make in sales that isn't just their salary, and reinvest that into opportunities and projects that, number one, they can't find anywhere else, and number two, these are tax advantaged opportunities where they're able to put their money to work for them and really truly create generational wealth and financial freedom for themselves and their family. And that's the name of the game here. All right. So let's go into the problem that we've got, that most sellers run into, stuck in this earn and burn cycle, as I call it. And I mentioned before that you get it, you have a check, you get a commission check looks great, and when you actually check the deposit amount that's actually deposited from that check, or from the theoretical maximum amount from the gross amount, it's usually a big difference between gross and net, right? The amount you got paid, and then the amount that you actually were deposited into your checking account usually is a bit different because of what's withheld for taxes and stuff like that. So that part kind of sucks. I mentioned earlier in the very beginning, I said, fundamentally, we're still trading our time for money, right? So if you stop selling, your income stops. That's not really generally a good thing. We talk about taxes eating up nearly half of your commissions, and obviously the desire to earn passive income is pretty ubiquitous. Most salespeople that I talk to, that desire is still there. The problem they've got is, because they're too busy trading their time for money, when they do have time, they don't have time to go figure out how to create passive income. And that's sort of where I come in and help solve that problem. It took me many, many years and hundreds, if not ultimately thousands of hours to acquire the level of knowledge and experience that I have today, right? From building a portfolio of over 700 apartment units. I got to update that number because there's a lot more units and deals that we're part of post that number, but 700 sounds like a really good number. Building an in-house property management organization, and then ultimately building the business that we do now, helping to allocate funds for investors into best-in-class deals for best-in-class operators. And that's the name of the game here. And then, of course, finding these tax efficient deals where the taxes that you'll pay on the money that you invest in these projects is generally taxed at a much lower rate than what you're typically finding on how you're paying taxes on your active income, right? So, kind of set the stage again, and this has been discussed in other workshops. Fundamentally, the problem we have as sellers is the way the tax code is written. The money that we make as active salespeople is potentially taxable at the highest potential rate. That's fundamentally problem number one. The way to shift that is take the money that you make and invest it into projects where your money that you earn on that is taxed at capital gains rates. And capital gains rates are taxed at a much, much, much lower rate, sometimes almost 50% lower than that, depending on which tax bracket you are. These are kind of high level numbers. We're just trying to keep it simple for you to illustrate a point. Cool. And the other problem is, well, not really a problem, but like the point I want to make here is that passive income ultimately creates financial freedom for sellers, and that's the ultimate goal and game for most of us that we want to strive towards, is getting to financial freedom. I think for a lot of sellers I talk to, they have this idea or concept that, man, if I only had $1 million in the bank, or my net worth was $5 million, or insert something here, and I'll challenge you and question you and ask you, well, what does that mean? $1 million in the bank. Okay, well, that's kind of obvious. Once you hit $1 million in the bank, number one, why do you have $1 million in the bank? Right, that's not a proper use of all that cash. Number two is, like, what do you do once that happens? Like, are you just going to quit your job? You're going to put your feet up? Is there a better use for that money? Right, a lot of questions there. And then then if you say, well, no, I want my net worth to be $5 million. Okay, so your assets that you've calculated have you at $5 million of net worth. Now your rich. So then what do you do? Uh, If you figured that out, I don't know, like you let me know. So I think a lot of people haven't spent the time thinking about what it is, um, as is what goal you're trying to drive towards. And I think what I help sellers understand is the name of the game is understanding how can I create enough passive income to offset the income that I'm earning from my sales job. So, for example, using simple numbers here, simple example, if you're, let's say you in order to live, it costs you $10,000 a month, okay, $15,000 a month to live comfortably, and you're earning $20,000 a month right now, 25, whatever the number is. Cool, great. But again, we're still trading our time for money. So if you stop, putting in your time, you ain't getting any money, and you're not going to be able to cover that $15,000 a month in income that you need to sustain yourself. So what if you're able to take the money that you make and you invest it in projects where it has appreciation, it's got tax benefits, and it has the potential for cash flow. And that cash flow that you get, you can use that towards covering that $15,000 a month. Well, that would be cool. What if I get that 1,000, 2,000, 5,000, 10,000, 9,000? Maybe you get to cover half of what you spend each month to live, from passive income, and the rest is coming from your salary. That could be a great world. And then ultimately, the goal is to get to a point where you got enough passive income coming in to completely offset uh, all of the um, all of the income that you make and covers all the expenses that you have. Then you truly are financially free, and that's the name of the game, right? And I tell people that the work that we do here in the Tech Sales Investor Club, this is not an overnight get rich quick thing. I don't tell any of my club members, hey, you're going to invest into a project here, and then in 3 years you'll be so rich you can quit, and then that'll be it. Doesn't work that way, unless the only name of the game, unless of course you put enough money into some projects where the returns from those deals are enough to actually offset your income. What do I mean by that? So, for example, if you put $100,000 into a deal, and that deal generates hypothetically 12% average annual return. So $100,000, 12%, that's $12,000 a year. Okay, divide that by 12, that's $1,000 a month. Great money, don't get me wrong, but usually not enough to support the overhead for most of the people that I'm working with. So the way to solve that is you invest $1 million into a deal. All right, cool. $1 million at 12% is $120,000 a year. That's 10,000 a month. Okay, now we're starting to move the needle somewhere. See how that works? I'm gonna get a drink of water while I work on the next part here. So, are we on 50 minutes? So, I guess we'll talk about this. There's sort of three paths to earning passive income. I like to talk about. Most common ones are stocks and REITs. A lot of times when people think about real estate and investing, a lot of them know about REITs, real estate investment trusts. I think of is what the heck the thing is. I don't invest in REITs, so I'm not an expert in it. But what I do know is that most REITs, when you invest in them, depending on the REIT itself, the income derived from the REIT can be taxed as ordinary income, as kind of a dividend. And the problem with that, going back to my earlier conversation, where fundamentally the problem that we've got as sellers is the money we make is taxed the highest rate. Well, that potentially can be a problem for you where you're still earning income taxed at the highest rates. And again, the name of the game that you want to do is earn your income through the capital gains doors, because the capital gain door is where you have the ability to pay a much lower taxable amount on it. And generally speaking, you've got a lot more flexibility with what you can do with that income as far as tax sheltering it, having more write-offs and more things that you can do to lower your tax liabilities. So not a big fan of REITs. And then stocks, those are cool too. I think there should be a place in everyone's portfolio for stocks. But both of those things while they're both hands off, unless you're doing day trading, which I wasn't very good at that. They can be pretty volatile. And then, the value of your portfolio is sort of it swings day by day, depending on what's going on the market there and in the street. The other option is businesses and franchises. Those are Very interesting idea. So that means you buy a business, you buy into a franchise. Those could be cool, but if the name of the game is passive income, those are typically high effort, not passive opportunities. So that doesn't really scratch the itch. And then, of course, there is this concept called real estate syndications. Now, this is where things are hands off and have the potential for high returns. So, what is a syndication? Best way I like to describe a syndication is it is a legal structure, right? A legal agreement for parties to go into an opportunity to invest in something with the purpose of making a profit or making money. And real estate syndication has the ability to have two classes there. So you have the managers, the people that are actually doing the active day to day, and then you've got the investors that are just putting in money. They're the silent partners. They have zero involvement in the day to day operations, but they want to benefit in the profits when there are some. So, excuse me. So, the deals that I've done as an active investor have pretty much all been real estate syndications, and that's what we talk about. I talk about that in my book, So Rich You Can Quit. Which, by the way, if you were watching this and you want a free copy of my book for the entire month of January, if you DM me the word "So Rich You Can Quit" Jan, as in January, I will send you a free copy of the book to read. I do cover what real estate syndications are and how they work and how I've made money on that and all that stuff. So here's why real estate syndications win. I guess I could say, right? For the people that are investing in it as passive investors, like my club members, there's no tenants, there's no toilets, and there's no trash or time commitment, really. The only time commitment is up front when you're signing the paperwork for the deal and deciding if it's the right opportunity for you. Typically, the returns are higher in a syndication than the stock market. Now, it depends, of course, it depends on, there's this element of risk reward, right? Generally, the higher the perceived risk, the higher the reward, the lower risk, the lower reward. So where's the reward risk come into? It usually comes into the actual sponsor, the people running the deal themselves, how much experience they have, what their track record is. And then, of course, there's the asset itself. Its location, the business plan. Is it something that we've got to spend millions and millions of dollars to reposition, to turn it around? Or is it something that's existing and operating today? We're going to do a couple of operational things and fine tune it and tap into the cash flow into the property. That comes into play. Of course, there is also built-in tax advantages, depreciation, tax write-offs. These are things that you're not going to get with a REIT. REITs don't have these things where you could take the amount of money that you invest into a deal and then do a special loss study on it with your accountant and write off a portion of that against your other capital investments. Right, not really a thing that is in there for REITs, but is in there for these sort of real estate investments. And then, of course, as I've been harping along, they're truly passive deals, right? If the name of the game is to create passive income, where you can create mailbox money or money where like it's still working for you while you're sleeping, that's the name of the game. Sorry for the coughing. I just got over bronchitis. Got it last week in traveling to New York with some client meetings. And man, it's the worst not being able to sleep and talk and all that stuff. So I'm glad to be on the other end of that. Got about 10 minutes left and I'll get in some Q&A here. So let me kind of paint the picture of how, all of this can actually be used for you, right? So I have a club. It's called the Tech Sales Investor Club. I know, very, very creative, right? In the club, I invite sellers. Ideally, you've read the book, because the book kind of gives you the foundation of what you need to know, right? I've shortcut the process for you in the book. But if you don't want to read the book, that's okay too. I help sellers get their financial fortress in place. What the heck does that mean? It means we help educate them on the tax strategies that we employ here. And I know people hear the word tax and they immediately like shut down and fall asleep. Like, let's not do that. So tax strategies to employ, getting your will and trust in place. That's really important. A lot of sellers I talk to don't have that in place, so we help you get that set up. And then we help build your foundation around understanding how investing in real estate works. And the real estate that we do, this is not wholesaling or fix and flipping. It's not HGTV. This is being a passive investor in large commercial projects, large apartment buildings, large self-storage projects, large mobile home parks, things like that, those sort of assets, and teaching you what you need to know so you can feel like you're a savvy, confident, comfortable investor. And then we get you access to our pre-screened and pre-vetted deals. My whole team, we're constantly interviewing new sponsors to find new opportunities to put your money into. Last year, 25 and 24, we looked at about 75 investment projects, and we only moved forward with 4 of them. So we looked at 75 of them. We only went forward with 4 of them. So we're really, really picky. And we're picky because we want to try to minimize risk for our investors as best we could. And we bring those deals for you to invest in and make it as turnkey as possible. And so if you're interested in discussing what life could look like in our Tech Sales Investor Club for you, reach out to me over DM, and we'll have a conversation on what that looks like. You can also go to techsalesinvestorclub.com. There should be an apply button on there as well if you don't want to talk to me, but you're going to talk to me anyway. So, all right. We covered the timeline for that. I got some time. Yeah. Cool. Yeah, I guess that's kind of really it. So if you got some value in this workshop, I implore you to reach out to me over DM. Let me know that, number one. And then number 2, I'm be working on putting some more content for next week's workshop on Thursdays, on Tech Sales Thursdays. I've got some Q&A questions that I'll throw out there. And if you have any live while we're here, feel free to throw them in the chat there, and I'll get to them as well. So let's see. First question. What kind of returns can I realistically expect from passive real estate investing? Well, I'll tell you about the returns that we put together for our investors. Now, these are deal by deal specific. We only work with accredited investors. And what that looks like is generally between, call it 15 to 18% average annual return are typically the realistic returns that we look for our investors. Those are on the conservative side. Some deals can yield a lot more than that, but we try to minimize the downside risk by kind of giving you a conservative look on that. So call it 13 to 15% on the low end, up to 18% ish average annual return on the high end. All right, cool. Let's see next. How long does my money stay locked up in a typical deal? All right. Well, it's again deal specific, but typically call it 3 to 5 years is how long your money goes to jail, is the best way I like to describe it. You can't have any conjugal visits with your money. It's sent away. It'll write you letters, it might even send some home to you, right? But I like to say that you can't spend what you can't touch. So that's always a good thing. Some deals are a little longer, but typically 3 to 5 years. And also I will say some deals have the potential for a portion of your money to come back to you before that 3 to 5 year horizon. What do I mean by that? Well, if it's an apartment deal and there's a refinance because you've forced the appreciation and increased the value. I talk about all this stuff in my book, by the way, So Rich You Can Quit. If there's a refinance, you might be able to get 25, 30% plus of your money back somewhere in the first year or two. It depends on the deal, it depends on the sponsor, on the business plan. That's why I say it depends, but that's not uncommon. When that happens, you get 25% of your 100K, for example. Well, okay, guess what? Go put that 25 grand into another project, into another deal, so it can go work for you as well. And now you're in 2 deals, right? And then you can keep, dividing and conquering from there. That's kind of really cool. Time commitment. All right. I don't have time to learn real estate investing. How hands-off is this really? Like, is this really hands-off? And I'm trying to do my best, Larry David, Inquisition face, if you know that show. So in our program, in our club, we tell you in less than 90 days, we will get you from 0 to being into your first passive real estate deal. And that is no joke. The total curriculum is about 14 hours, and that's over 90 days. That's about 15 minutes per day on average. A few of our club members were able to bang that out basically in 2 weeks, 3 weeks. but it's really up to you. But I know I'm going to give you the space to be able to do that. Um, and then as far as time goes, really what happens is you watch a webinar, you watch a deal explanation from the sponsor themselves. Hey, here's our track record, here's our deal. That could take 45 minutes. You review the paperwork. A lot of the paperwork is sort of done once. And then moving forward, you do the same thing. You watch the webinar, you sign some paperwork, wire the money, and that's kind of really it. So it could be, I like to say, between 1 to 2 hours of upfront time per deal every time you want to invest. And it gets better and better and shorter as time goes by. How long does it take to start seeing returns from an investment? Ooh, you want to guess what I'm going to say here? That's right. It depends. It depends on the deal itself. So some of the deals that have cash flow. So it depends on the deal, depends on the asset class, depends on the business plan. But I would say here, the deals that we've done, the 4 deals that we've done for our club members, they have had a component where they were making cash flows, some in as little as 3 months, and others within the first 6 to 8 months of closing of the deal is when cash flows would start happening. And the frequency of those cash flows, they're typically quarterly, but they can be monthly. It does depend on the deal itself. So that's pretty cool. That's really cool. Okay. How long does it take? If I'm completely new to real estate, can I still invest successfully? Yes. And that is exactly what the Tech Sales Investor Club does. It helps you go from, hey, I've never invested in a real estate deal before. Yes, I bought my house, but I don't know anything about this. We have some club members who've actually invested in their own deals. They bought their own rentals, a duplex, or multifamily, and they just realize, you know what, that was supposed to be passive, and it's not. And I just want to do deals with you, JP, because these deals are really passive. So yeah, you don't have to have any experience. We walk you through the process, and under 90 days, we get you into your first passive real estate deal. It's pretty cool. What happens if I pull my money out before the deal ends? Oof. Well, you typically can't. These are illiquid investments. There's generally no secondary market for these things. So unlike the stock market where, hey, you're done with the Coca-Cola trade and you want to pull it out because you want to go on vacation or do something with your money. There's no really other place to take your spot for that investment. So the answer is you can't. Your money goes to jail. You can't touch it. You can't see it. Well, you could see it, I guess, but you can't do anything with it. So know that. And I get one more question here, maybe 2. How can passive real estate, that's going to be a long answer. How depreciation, what kind of legal structure should I have in place? Can I use my 401k or IRA to invest in a real estate syndication? Yeah. So can I use my 401k or IRA money to invest? Absolutely yes. And members in our Tech Sales Investor Club, we have a kind of a custodian partner that we work with, where if you have your money in a that you didn't roll over, it's from an old employer and you want to roll it over. Well, we have a custodian that we work with that allows you to run a self-directed IRA. And so you'd be able to kind of pick and choose which investments you want to put your money to work in. And it doesn't have to be the stock market. And of course, yes, we work with people that have self-directed IRAs already, and they're able to invest in our deals. It takes a little bit more time, but absolutely you can put that money to work, no problem for you. And with that, we've got about a minute left, and I don't want to go into another question, because my next question is, how do the ultra wealthy structure their investments to pay less in taxes? And can I do the same? Yes, you can. So with that, I appreciate you watching this workshop for this week's Tech Sales Thursdays. Hope you got some value out of that. I enjoy doing these workshops. And again, if you haven't already gotten a copy of your copy of my book, So Rich You Can Quit, go ahead and send me a DM with the word text, So Rich You Can Quit January, and I'll get you a free copy. And actually, the promo for the rest of the month is, if you do that, I'll get you an audio book version of that on Spotify. So that's the secret bonus for those of you that stood through the entire program here. Thank you so much, and I will see you next Thursday for next week's workshop. Thanks so much. Bye.